Hello and welcome to the Investing Master Series. My name is James Boyd. Today's date, December 16th, and yes, we are inside 10 days to Christmas. Hopefully you've set a target for yourself of when you're going to be done with Christmas shopping. My wife and I bought a big Christmas gift last night for my son. The thing was a monster Lego set. I think it was like 12,000 pieces or something like that. Couldn't even believe that, how big it is. You should be excited, but nobody tell them. All right. Just real quick, we have Barb Armstrong with us in the chat, so we welcome her. She will be also teaching this afternoon, and she will also be at the Miami event as well with Ben Watson and Rachel Dashel as well. So you're there, say hello. We also have Kevin with us, Felix, Josh, Bill, Paul, Greg, Amanda, and many others. Welcome to all. Let's go ahead and hop right in. Today is really part two of reestablishing a portfolio for 2026. Now, I'm going to go into just real quick something I just want to make sure you're aware of. So if you said, James, I did not know that. If you go into this link that I'm sending you right here, okay, that's the link from yesterday's class on trading with technical indicators. It's called day number 1 for 2026 structure and strategy. So if you said, I did not see that, I'd like you to go to that link that I sent you in the chat. Okay, you'll see it. And it really starts at 2 minutes and 50 seconds where we start kind of breaking into how we're going to set up the portfolio. Today is going to be an extension of that. So this is really part 2. Okay. So just real quick as we hop right in. So I want to make sure you know about that. So if you didn't do that, there's your homework, a little follow through. And then today we'll kind of connect these pieces. Now, first off, just real quick as we get going, remember you can find Barb and myself and all of us coaches on X. We do post educational content and announcements as well. From time to time, we do post things that are humorous as well. It's good to actually get a laugh. All the wrinkles on my face are not caused by old age. It's caused by laughing so much, and that's actually a good thing, okay? Now, remember that also options carry high-level risk, not suitable for all investors. All options are not the same, so be aware of that. Also understand that when we talk about examples, they are done for illustrative purposes only. When I talk about the information, it's done for general informational purposes only. Remember that our examples would be done in a paperMoney software application. Investing involves risk, including loss of principal. And when we talk about short options like cash secured puts or covered calls, when there's an obligation, that obligation can be assigned at up to expiration regardless of the in-the-money amount. So it's a standing obligation, okay? So be aware of that. Now also remember when we talk about examples, I'm going to kind of talk about stocks and options. So what I want to do just right off the bat, okay, I want to kind of go back to this little sheet of paper just real quick, and I just want to break down so we can hop right in. We set the portfolio value. So we said the margin, and I'm going to do this fast, the IRA. We said that account is going to be about, what, we said $40,000, okay, and I'm going to break into the numbers a little bit more, $150,000. And we actually said when we kind of look at that portfolio, and let me kind of separate this just quickly. When I separate that, we mentioned, and I want to break down right now, kind of when we talk about the percentage loss or dollar amount, we're going to say on that margin account, we're going to take 3/4 of 1%. 3/4 of 1% is going to be yours truly, $300. If we actually say, look, we're willing to take, let's say on that bigger account, let's say maybe, and if I did this, some people like to, we're going to show the example of 1%, and that 1% is going to be $1,500. Now, does the investor have to do that? No, I'm just going to kind of show that, okay? So this is the percentage loss per trade. This is the dollar loss per trade. Okay, now, how many of you think that maybe that 1% is a little much? Okay, I mean, here's the thing. You don't have to do that. That would just be really the cap, okay? So when we show examples, this is when we talk about position sizing, okay? Position sizing, stocks or options, it can be up to that amount. It doesn't have to be every time to that amount. So these are the caps, okay? Now, if you like dollar cost averaging, like some of us investors here, you might say, I'm only going to do 1,000. I'm going to do 750. I'm going to try to dollar cost average, try to get in not once, but twice. Now, the other thing actually kind of here as well is we're trying to really have, when we talk about stocks to options, we're really trying to really have an 80-20, okay? So when we say 80-20, what does that really mean? 80-20 actually means in this case, that we're having $32,000 of stock, and we're actually trying to have $8,000 of options. $32,000 of stock, on that one, $120,000 of stock and $30,000 options. Okay, let me put that there. Now, I want to kind of just talk about, before we look at our first, kind of look at the market, look at our first trade example, kind of putting this to work here, is we also kind of want to just break down something. So we focus really on 8 strategies. Okay, now you might not focus on 8 strategies, but we're going to. Okay, now I want to kind of just fill in something. We said stocks, and I'm going to type this fast. Covered calls. Okay, we actually said married puts. Okay, we also said collars, cash secured puts. Okay, and we also, with that, we said long synthetics. Now here's the deal. In my mind, I'm thinking all these are very similar to each other. Okay, so when I say trends, I'm really talking about what type of trend. Trend 1, 2, 3, 4, 5, right? So if we said, well, what might be the optimal time to actually do stocks? Trend 2, 3, and we would say 4. Same thing when we actually, well, not same thing, when we actually say what type of trends on covered calls, we'd say trend 4. What type of trend would actually be on married puts? Trend 4. What type of actually trend would actually be on collars? Trend 4. What type of actually trend on cash secured puts? Trend 2, 3, and 4. What type of actually trend on long synthetics? 2, 3, and 4. Okay, so we are trying to target when that stock is in certain type of trends to actually do those types of strategies. Why on, for example, like why would the investor really wait to do potentially like covered calls in trend 4? Because you actually think the stock is starting to consolidate, maybe go neutral a little bit, and maybe the volatility is going to pick up, which might cause that stock to fall back a little bit. Why is the married puts actually in trend 4? Because the VIX is the lowest. Okay, the VIX is the lowest. You're probably actually going to see in that case that the implied volatility of that stock is lower. The implied volatility is lower, the premium's lower. The premium's lower, that actually means that the break even is lower. Okay, can I say lower one more time? Lower. All right, there you go. Now, but what about, for example, the short put verticals? Well, let's put those right there. Okay, short put verticals, long call verticals. All right, so what you're now going to kind of notice here is when we kind of put these right here, let's kind of put 1, 2, 3, 4, 5, 6, and I'm going to move this over, okay? Put those right there. So I got 7, 8. So I want you to imagine when we looked at like a toolbox, how many bullish tools, so to say, do we have in this sample portfolio? The example is 8, okay? You got 8 type of strategies that we're trying to do. Now, remember, we drew up a diagram yesterday of what do you think the VIX is going to do? Do you think it's going to increase? Do you think it's going to decrease? Okay. Now, what I'm going to do is I'm going to fill in the blanks on kind of 2 other things, but I want to kind of start, for example, just real quick here. And so I want to kind of make mention of some of the tools present that we actually use. Now, remember, number one tool we're actually talking about is the Market Watch, okay, quote page. Okay, so the Market Watch quote page. That's number one. The second one is just real quick, the charts. And we're going to just call that, when I say that, the package of charts that I shared yesterday. And I'll share again today. Why? Because I'm a sharing person. Okay, the package of charts. Now, I want to kind of go back to something that we saw this morning. Okay, so when we look at the market, of course, we're actually looking at, let's say, and I want to kind of write this down because this is important. When we look at, let's say, prices. So when I say prices, what are you talking about? Well, I'm thinking about the US dollar. I'm actually thinking about, let's say, oil. I'm thinking about gold. I'm thinking about silver. I'm thinking about copper, right? All of these major things. Now, I'm just looking at the prices of these commodities or currencies, et cetera, and are they moving things? One of them that was hard not to see was kind of like the US dollar. Okay, now if we go to the US dollar for just a moment, if we bring this up for just a second, crude oil this morning, it dropped again. I mean, it wasn't just drop a little bit, it was just drop down through the floor. Okay, now if we take a look at this, what I want us to kind of notice here is if we're dropping down through the floor, what type of areas, now we're looking at these prices for nothing. We're saying what might benefit or what might get hurt if the prices go up or down. Can you think of two areas that might benefit if prices of this were going down? Like any investing themes, any trading themes? I mean, number one, we'd kind of be thinking about, let's say, maybe if oil goes down, could maybe airlines go up? So airlines. Now, the other thing is, I filled up my gas the other day on my Toyota Tundra truck, and it was only $61. I kind of felt pretty good about that, okay? Now, if the price per gallon goes down, and it also translates to the pump, maybe that means that James would be willing to spend more money on stuff. Now, discretionary stuff, retail, right? So those might be some immediate investment things. Now, give me some tickers that maybe we can look at. So if we're saying, hey, crude oil maybe drop, are there any airline stocks potentially or group that might benefit from that? What are they? Give them to me. Don't just sit there and watch me. Now, one of those, my family's going on vacation tomorrow. Good for them. I'm glad they could take a vacation. You're going to see that Delta has really been on that nice continuation of an uptrend. Now, even the ticker symbol love, that has also been squirting to the upside as well. Now, the one that we're kind of missing here so far is we could say Alaska, but Alaska, I mean, fine. That's kind of like a reversal. We could look at that, but that's not necessarily the one I'm thinking about. I'm kind of thinking about you. Okay, American Airlines. Yeah, we could think about American Airlines. And let's kind of use that. Now, why are we going to use that? Well, because that's a lower dollar stock. That might be something more applicable for a stock traded in the margin account. Come back to that. Let's type in UAL for just a second. Now, UAL, for example, has earnings here on the 20th. Okay, so let's go back to the paid money count for just a second. The paid money count, reset those portfolios. Now, James, why did you reset the portfolios in the middle of the month of December? Because that's what we did last year. Okay. And the other thing is some people might be gone over the holidays. Supposedly there's this thing called family. You're supposed to spend time with them. Okay. Now, if your family is as special as mine, you might be thinking, my goal is just to get through the holidays. I'm joking. I love my family. But I'm just saying we're all special, aren't we? Boy, aren't we ever. Now, here's the deal. I want to kind of use, let's say, the margin account for the AAL trade, double AL. And I'm going to kind of, for example, on the IRA account, we're going to actually go look and say, can we look to do let's say a type of trade potentially like a cash secured put. Now, when I say that cash secured put for just a moment, okay? So when I say, let's say cash secured put, we are also saying, let's say short put, okay, plus long put out of the money, okay? Now, here's what I'm going to do. Now, I'm going to go back to that just real quick. Go to the trade tab. Now, we're assuming that there are liquid options. We'd have to go look, okay? So if I go look and say, now remember, we tend to focus on monthly options. Why? Because that's where the liquidity tends to be, okay? It's a starting point. Doesn't mean we can't go look at weekly options, but we're going to start at the options, 20 to 50 days to expiration, the monthlies. Because if they're not liquid on the monthlies, it's probably going to be hard to see that they're liquid on the weeklies. Now, if we go look at, let's say, something that's out of the money, maybe like a delta 30 to 40, somewhere that's a starting point, well, that's going to be really the 110 strike. Second, we actually have in this case the 105 with is going to be slightly closer to the delta 30 to 40. If we chose the 105, we're trying to be a little bit more conservative, lesser chance of the stock closing below that strike at expiration. If we chose the 110, what is kind of the stance? Well, the stance in this case is that if you pick the 110, you feel pretty confident that this stock could move up and away from the 110 strike. Does that make sense? Now, how many of you would pick that 110 strike? How many of you would say, James, I'm more confident? Now, if you pick the 110, you actually think it's going to go up and away from the 110, but you're also saying at the same time, I really don't mind in actually owning those shares because there's a greater chance of actually being assigned and or the stock trading below that strike and or closing below that strike, all of the above. How many of you picked? Now, Jeffrey actually says, hey, not so fast. I like that 105. Now, remember, if you pick the 105, you're trying to pick more of an income strategy, lesser chance of the stock being below that strike price. So let's put this to work. So let's say the investor said, now Eric actually says 110, Kelly says, I think 105, Yina actually says, give me the 105. Well, let's right click on that bid. Right click on it. Gonna go sell. Gonna go to vertical. Now this is not the typical vertical that Barbara teaches. This is the vertical where we're gonna spread the strikes out. Why? Well, because what we're doing is we're saying, look, I want to buy a put with downside protection with a delta of 10 or less. Okay, now wait. When you do that, what is it doing? Well, if we bought a strike to the downside, it gives us the right to sell. So the risk is not down to zero. The problem with that is you pay for it. We could pick this one, we could pick this one, and we could pick this one. Now, in this example, I'm going to pick even the 90 strike. Now, the wider that you make those strikes, the bigger the credit. However, whenever you say there's a pro, there has to be a con. When you widen that out like that, what it also does is it makes the max loss bigger. Noted. And that max loss is actually saying if we close below the 90. Now, since we're buying a put too, we actually have $1.30. So the trade, number 3 in this account is really going to be putting on a short put. So when I say short put, we're saying short put with downside protection. You could also call it a short wide put spread. Cash secured put with downside protection. Okay. Now, on the IRA, if we did not buy a put, they're going to want us to set aside a lot more money than this, probably about $10,000 instead of $1,200. So we're trying to be capital efficient, that we don't tie up everything into one trade. So how do I view this trade? I kind of view this trade as a stock trade, okay? Because it's the obligation to buy the shares at the strike price. Now, if we kind of said, if we were assigned, we want to think this through ahead of time, okay? If we're assigned to buy these shares at 105, how much of the portfolio is it? It's about 9% of the capital of the portfolio. It'd be about 10,000 shares, $10,000 worth of stock. If we got about $150,000, it'd be about 9%, right around there. So what we're going to go ahead and do is going to put that in the IRA. There it is. Send the order. Okay, right there. Now, what I'm now going to do, okay, so let's go back to this monitor. Now, it hasn't filled. So when we go back to, let's say, that short put position, it hasn't filled yet, and that's why it's sitting down here, and it just hasn't filled yet. Now, if it doesn't fill in the first 2 to 3 minutes, we're going to go and see if we can adjust the price for a little bit. Now, I want to go back to the margin account just real quick. Margin hasn't felt any love so far. I'm going to go back to AAL. Now, on these smaller dollar stocks, and I'm going to look at another one as well. I want to go back to the, okay, so let's make sure. So it filled. Let's go back to the IRA. Going to go back to monitor, and it should be sitting. So I got to put it right in that section. I'm going to click on both lines while holding the control key down if you have a PC, or command if you have I was going to say Superior, but I won't say that, a Mac computer. I'm actually going to go, let's say, short puts, okay? So I put it right there. Now, what I'm going to do is let's go back to, let's say, the margin, okay? Let's go back to the charts. Now, remember, when we talk about trading the trend, we should be able to see in the last 1 to 3 months that there is an upward trend. Would you say that there is a trend in the last 3 months that we can visibly see in the last 1 to 3 months that there's an upward trend? Would you say that there is? Now, remember, is it the fact that really oil is the only independent variable that causes airlines to move up? Of course not. It's business confidence, it's consumer confidence, it's maybe where interest rates are headed, right, over time. It's jobs, it's all of the above, okay? It's GDP, etc. It's not the only independent variable, but it's one big factor. Now, what I'm going to do in this case is I'm going to, let's try to buy an example given a stock position. Now, if we zoom in on the right-hand side, what we were very clear, crystal clear, in 2025 is we kind of talked about that 1, 2, 3 methodology. Uno, dos, and we're going to see tres at the same time. 1, 2, 3. And so if we go back and say, okay, that's where it was right there, but where are we at now? Well, we're still in uno, dos. And so in this case, this is entry setup number 2. Why is it number 3? Well, we don't have the moving average crossing over yet. Now, what would cause the moving average to cross it? Well, James, duh. The price getting above the 20-period moving average. The longer we stay above that moving average, the greater chance of actually that crossover could happen. James, duh, James. Okay, I mean, I know you guys get it, but I'm a little slower. Now, here's the thing is I'm going to right click on this chart. I'm going to go down to buy custom. Now, let's go back to that position sizing. Well, what you got to remember and by the way, be easy on me. You guys are tough on me, okay? Just go easy on old JB here, okay? JB is going to eventually get it, okay? All right, there you go. Now, let's say we actually had, let's say 80% was in stocks. Well, 80% would really be 32,000. Now, if we have 32,000, if we said, hey, if we bought example given, let's go back to this. If we bought example given, let's say $1,500, why $1,500? Or we bought $1,600 in stock. If we bought example given 100 shares, well, $1,600 on a $40,000 portfolio, is that too much? Well, it would only be 4% of the capital of the portfolio. Now, let's say the portfolio is willing to, let's say, put 5 to 8% in any stock position. Well, we could maybe do 200 shares if we were going to pump it up to that 8%. Let's show that example given. We're going to right click on this. We're going to go down to buy custom and we're going to go with OCO bracket. Now, whoa, what are you doing? Well, if we buy it, we're going to put a target and a stop. So now what we're going to do in this case is we're going to put a target. Tell me where that target is. Remember, don't just sit here and watch me, okay? You're going to stop dated GTC. There it is. Now, if this was you, where would you put the target? Where would you put the stop? Now, if we kind of ask where we might see a potential target, I'm going to go back and kind of say, obviously, the prior high is there. Some other areas where we kind of had some key consolidation is really right there. And another area where we had some consolidation is probably right around that 1778, 1768 mark, somewhere right in that vicinity. Now, let's say I said, look, I just want to have a greater chance of potentially hitting that target. I'm going to put it right at 1768. If I said, where do we see support? Well, that support or that last little higher low that we had was right around that diagonal level, probably right here, right where that green line is. That green line, or excuse me, green dot, is right around 1498. 1498 less 3%, because we're lower than $50, it's going to give us 1453. Now, I've said over and over again, you can look at reward risk. I don't look at reward risk, not initially. We tend to actually set a looser stop, so there's lesser chance of getting stomped out. Doesn't mean there's no chance, lesser. So we got a $15.99 entry price limit. That's the cap. Could buy lower. 1768 target, 1453. We actually got to stop. That's the trigger to sell it if it goes to that price or less. It could be filled at a lower price. So trade number 2 here today, margin account. Now we're going to go to 200 shares. 200, 200, 200. Now you buy 200 shares of a $16 stock, it's going to be $3,200. $3,200 of a $40,000 account, it's going to be right in about 8%. We can't buy anymore. Confirm send. There it is. Now I'm going to send that and I'm going to see if that trade fills. There it fills. Let's now put it into that section of the portfolio. And I'm going to go back to that. So there it is right there. I'm going to move it right there to the stock section. Put it right in that folder. Spank you very much is what Hannah would say. So yeah, spank you very much. So I want to also go back just real quick to one other stock that we made mention of yesterday, okay? AU. I just want to kind of take a quick look at that. I want to kind of take a quick look at gold, kind of where is that kind of being this morning. Let's go back to this chart, gold, okay? And I'll share this chart with you. When I look at gold, I just want to see where it is, about 740. Hasn't broken that horizontal yet. But as we come into, let's say, 2026, probably wouldn't be surprising to see if that broke up. I made a comment that some investors might be forecasting, and some investors were Kevin and I, but we'll have, I don't know if it's going to happen, but When we talk about a price target, that's $5,000 on a price target on gold. Silver, we were at 64. Where are we at now? Gosh dang it. We went to blast at 65. Okay, where's copper at? And if we look at that, it hasn't broken 550-ish, but it's holding, kind of consolidating. Now, what I want to do is I want to go back to just real quick one example. Now, I want to use AU as an example of, let's say in this case, a buy stop order, okay? Now, when we see something like this, if someone said, hey, James, I'm looking to get in, but I really want to see the price go above the recent day's highs. Every time we get in, it doesn't have to be something right now. If you're saying, I don't want to get in right now, it's probably because you're seeing red candles, and red candles. Fine. So now what we're going to do is say it's not meeting our entry signals. It's not breaking out. It's not showing a brand new hold and so on. And I'm really wanting that stock to really get above that 86.40 threshold. And so what we're going to do in this case is we're in that IRA account, we're going to say, look, we want you to get above, you being the stock, to get above that 86.50 threshold. We're going to right click on the chart, buy custom, and what we're going to do is we're going to go with OCO bracket. Now, what you're now going to see is we're going to have a plan. Now, don't laugh when I say this, but most people, they have a plan not to have a plan. Please tell me you get that. Let me repeat that. Ooh, go back. Most people have a plan not to have a plan. So if someone says, hey, James, I'm going to do a buy stop limit order, they're saying I have a plan to get in if it gets to 86.50 or higher, and I'm willing to get in no higher than 86.75. So someone who puts in a buy order like this is saying, look, I think the trend's going to go up, but it's kind of in that little consolidation exhale phase. But if that stock starts to shoot to the upside, I want to try to get in, price has to go to 86.50 or higher, but then there's a cap on that. Now remember, the narrower that range is, the lesser the chance it has to get filled, okay? Now, in most cases, we do like 25 cents, 50 cents, maybe $1 or so. I'm going to use the example of 86.75. So if this stock were to gap to the upside above 86.75 and never goes back down, we might miss the chance to get in. Now, when we talk about the position sizing, okay, for just real quick. So if we went back and said, look, $150,000, let's say we said the same thing, let's say 5 to 8% capital. Well, let's say, what's the maximum? Well, let's say if we said 8% max, okay, and I'm just going to use the 5 to 8%. If we said 8%, it'd be $9,000. In that previous example, we went to, let's say, 10,000. We went to 10%. If we said 5 to 8% was stock, it would be $15,000. Okay. If we said, hey, James, but I want to allocate that 5 to 10% of the 120,000, fine, let's do it. It's still going to be $12,000. Okay. So if we said, look, the most we could put in of the stock portfolio is $12,000. Well, we're going to go over here right to the little pool balls, percent, dollar amount, and type in $12,000. That's the most that could be invested. $12,000 there. It's going to be 138 shares. Now, here's the deal. Here's what normally happens, okay? If you say, James, I don't want to buy 138 shares because maybe I want to do this in the covered call. We don't have to. We could say, look, we're just going to do 100 shares. Why? Because I don't want 138 shares. If I did a covered call, now I got 38 shares on the outside amount. I don't want an uneven amount. I'm going to lower it. What is that going to mean? It might only be 8% of the portfolio. This is normal, okay? Now the target, when we actually go back and look at the target, we kind of see that on this upper amount. So this is trade number 3. Now the way you learn about trading is not just watching some person teach about trading and or investing. The way you learn about trading or investing is you practice trading and or investing. Yeah, but I read this book and it was really interesting. Great. Maybe the book was written by someone who doesn't even trade or invest. Don't know, right? The way you learn about it is you actually go out and practice in the paperMoney account. feel free to practice alongside us in the paperMoney account so we can learn together in class. Now, if we're saying what might be a potential target, we're going to put a target right about 94.25. That's that diagonal line there, right in that vicinity. Could it extend higher? Maybe. Maybe. We're about ready to find out. Dated GTC. Now remember, that target's not good until what? Until the order fills. So now the stop, is that valid? No, it's not valid. You got to get the stock to be purchased first. Okay? Well, that 82.20 or so, 82.20 less, let's say 2%. No, wait, why 2%? Well, 2%, it's on a stock over 50 bucks. Okay? It's going to be 80.55. Okay? Now, dated GTC. So what you now see is this is a buy stop limit. When would the investor use a buy stop limit? Someone that says, I like the trend, but in the shorter term, it's kind of in that little fleeg, that little pullback, okay? And that pullback, it's not giving us a to hold or hold right now. It's not giving us a shorter term breakout right now. But the investor's saying, look, I want to have a plan to have a plan. And I want to kind of say, look, if that stock squirts to the upside, I want to try to get in. Now, if it goes to that price, is it guaranteed that the stock is going to go up? Of course not. But if its stock went up to that price, that in the shorter term would be a higher high. If you make a higher high, the greatest chances potentially could be that you make a higher low. If you make a higher high, potentially could make a higher low. And if you make a higher high and a higher low, that is what we call an uptrend. Okay? Now, if we go back to this, we're going to go confirm and send. Trade number 3 here. What we're now going to go ahead and do is send that order. And I thought I was in that different account, but I could fix that super duper quick. So I'm just going to put that right there, right? Don't worry, we can fix it. Said 100 shares, there it is. We said buy stop limit. What was that price? 86.50. Okay. And the cap there, we said 86.75. Dated GTC, dated GDC, and good till cancel all the way down. Target, we actually said what price? 94.25. Type that in. And we said the stop right there. We're almost done. 80.05, 80.55. Okay. paperMoney count, IRA, there it is. Got 100 shares. It's a stock trade. Confirm send. There she is. Now remember how that stop works. The target and the stop are not valid until the order fills. Those are conditional upon the stock filling. The stock actually is filled. The stock actually goes down to 80.55 or lower. Is triggered to be sold. It's unknown what it would sell for. Now this goes both ways. If that stock were to gap up to, let's say, $100 because Berkshire Hathaway bought the company outright for a 20% premium above the closing price from the previous day, could it fill at a higher price? It could. Okay, that's the thing. When you sell something, it could benefit to the up and downside, but it's saying you need that price or better, a sell limit. What is the floor of what you're willing to sell for? Not lower. Has to be that price or higher. Send the order, fire the hole. Now, the comment was from Wiley is, are we going to stick with, and this is kind of, I'm glad you said this, but the comment was, are we going to stick to, so when we talk about the watch list, okay, we said Dow 30, we said in this case the NASDAQ 100, okay, we said the S&P 100, and the purpose of those areas is we're looking for something where the stock is more liquid, has a greater chance to have liquidity, but also something where there's option liquidity, okay? Greater chance to have option liquidity. Now, we said yesterday the S&P 500, we said we could look at those, and what are we really trying to get out of those? Well, easy. Airlines, casinos. I'm going to also say insurance stocks, okay? Insurance stocks. And we're also going to say home builders, okay? So those are the 4 industry groups. If I looked at the S&P 500, which ones are we probably going to find that are not in the S&P 100, NASDAQ 100, Dow 30? Airlines, casinos, insurance stocks, and home builders. Now, when you say insurance stocks, what do you mean by that? Are you talking about like United Healthcare? No, I'm not talking about United. I'm definitely not talking about United Healthcare. I'm talking about companies like AIG, I'm also talking about chubby. Okay. Some people call it chubby, but it's chub. Okay. And you're going to see that in this case, there it is. So we're talking, so think of this as when we talk about insurance companies, you're not talking about health insurance. Okay. We're really talking about companies that provide insurance or reinsurance. Now, when you kind of think about reinsurance, you could think of it as companies that sold insurance that want protection on the insurance that they sold. Now, you could kind of think of this as like those are people that these are companies that are doing cash secured puts. Okay. Someone on one side is buying the insurance or protection. The other company, the other party is selling the insurance. Kind of sounds like a cash secured put. Someone who sells the insurance says, look, I want to just protect myself. If I had to pay out on what that maybe risk could be, the house burns down, maybe there's an earthquake or whatever the type of insurance policy it is, they're saying, I want protection just in case that does happen. I give you a little bit more clarity on that because that's really what they're talking about when we talk about reinsurance. And it could be property liabilities. It could be automobile. Okay. Environmental. I just said that, right? Earthquake, whatever. Property and casualty. Okay. Maybe if something really did happen with the land that it was sitting on, whatever. That's what we really mean by that. Now, the biggest thing, what you're going to notice on Chubb, just real quick, is this tends to be higher end stuff. Okay. This is collector cars, valuable articles, etc. So this is high type of premium type of stuff. Okay. That's what you see there. Now, I think we could also say with that is we could also say just real quick, travelers. Yeah, you could say that as well. Okay. Not sure if that's going to be the same level as Chubb, but there you go. All right. Now, we go back to really, so it's not that we're against the S&P 500, but that's not probably the first area that we look at. Okay. So remember, when you look at these, when you look at these on a daily basis, it's 230 stocks. But what it really is some of the stocks in the Dow are in the NASDAQ. Some of the stocks that are in the S&P 100 are in the NASDAQ 100. Really, if you kind of looked at the total watch list, there's 190 stocks, really, because you have duplication. Some are in each list. Okay. Now, if we actually go back to, let's say, when we talk about the trends here, let me ask you that question. So when we talk about the trends, what type of trends might the investor say I'm looking to do a short put vertical on? If you're talking about a short put vertical, man, we know exactly just like what we did looking at last year. We were talking about trends 1, 2, 3. Why? Why 1? Let's go. One, the volatility is the highest. It's when the stock is down near that horizontal diagonal support level. High volatility, higher implied volatility. Higher implied volatility, bigger premiums, lower break evens. Trends 1, 2, 3. And we would say here the same, which is really 1, 2, 3. Okay. And when you take a look at this, and by the way, I'm going to include 4, but the biggest thing is I'm going to asterisk that. When you get to a point where that, now remember, you know you're in trend 4 when you start to see that the VIX near the low and starting to diverge. So if I say 1 on short put verticals, that's when the volatility is the highest. 2 is when you start to get trend reversals. 3 is when you get bull flag mania. And trend 4 is when it's been up and now we're up near resistance. Could you do a short put vertical? Sure. But the premiums are materially different than what they were before. Could someone do a long call vertical on something they thought could actually continue to the upside? Sure. But if they're doing that on a long call vertical, they're clearly thinking that the trend is going to really continue. Now, the comment came in from, let's say, Canato1, and I apologize if I said the name wrong. If I said your name wrong, the rule of thumb I have, you can call me Jamie. Okay, Jamie. When we talk about doing this in 2026, we're going to create those sample plans for each one of these stocks, whether it's trend or swing. Okay. Now, when we said trend yesterday, we said 2 to 3 months, 2 to 3 weeks to 2 to 3 months. Okay, trend 2 to 3 weeks to 2 to 3 months. When we said swing, we said 2 to 3 days to 2 to 3 weeks. So what do you get by coming back? Well, the reason I'm hitting this again, because some of you missed it yesterday, is we're going to chisel away at these strategies where there is a written plan on each one of these. So if you said, hey, James, like, what are we going to cover first? Well, I would really like to probably start with really just, how about we just start at number 1? Now, I teach the class on trend trading. So like on Thursday, this Thursday, if you wouldn't mind, I'd like to just kind of create a sample plan this Thursday, okay? And let's kind of set some expectations here, okay? If we said, hey, on this Thursday, so this trend, we're going to start December 18th, okay? That is literally going to be on like setting up the plan for trend trading. When we talk about, let's say, swing trading, if you wouldn't mind, I would like to kind of start to set up that portfolio, set up that plan on December 22nd for the swing trading. Okay, so right there. Now, if you wouldn't mind, I would like to kind of start to chisel away on those covered calls, set up the plan for December 23rd. Okay, well, December 23rd. Okay, I couldn't think of any better way to start Christmas than to talk about December 23rd on covered calls. Married puts, if we just kind of, since we're right here, I'd like to kind of chisel away on this. December 24th, just looking at the calendar here. If we actually said, let's say callers, well, what about the callers? I'm gonna move just, so on the callers, I'm gonna actually say on the callers, like, we cannot do next week because that's Christmas. We could meet on Christmas. I'm not against that. My wife would probably kill me, but it's not the first time, okay? So the biggest, and I wouldn't mind, this is, what a perfect day. Okay, so we can't do the 25th. I would like to actually go back to, let's say, December 30th. Now, what does this mean? Okay, this means that you need to put on your, and then on the cash secured puts, I'm going to say, for example, let's actually go to, let's say, the January 6th, okay? And I'm going to say on the 13th, Jan 13th. So I want you to put these dates in your calendar. January 18th on Thursday, we're going to create that trend trade plan, 2-3 weeks and 2-3 months. January 22nd, swing trades, okay? That kind of fits number 1. Number 2, covered calls December 23rd, 24th, 30th. We're going to have the 6th, and we're going to actually have the 13th. Now, when we actually go to when could we actually fill these two right here, short puts and short put verticals, if I'm just kind of looking at the timing right there, I'm going to put, as soon as we can do it, it's going to be January 8th, and we're going to do January 15th. So we're just, now I just want to make sure, okay, we're not getting into Martin Luther King Day, which is my favorite, okay? Those are the time periods. So really what you're going to see is in the first 2 weeks of the year, there's going to be on recordings, plans with the structure and the strategy that we talked about yesterday and that we carry through today. We reset the portfolios, okay? Talked about that kind of more of the numbers and then established some more trades and kind of talk about the watch list that we're actually using, why, and then we actually have set dates. So as a listener, you actually say, hey, I could plug this into my calendar. Now, if you said, James, I'm going to be with my family on the 24th, well, you know, get in the car, pull out your phone or your iPad or whatever you got, and watch that class on Married Puts where it's going to be a sample written plan. Now, James, do you already have those sample plans written out? Oh, you better believe it, okay? This ain't our first rodeo, okay? So I want to share that in detail with you on these dates. Now, if we need some time to answer some questions that come up from these classes, we absolutely want to answer those. But the thing is, the portfolio is going to be using these 8 strategies. Now, again, from these 8, you might say, James, I wouldn't do 8, I'd only do 4. That's fine. That's fine, okay? But we're going to say in our toolbox, we have 8 bullish tools to try to attack or trade that trend, okay? I'm out of my time here today, okay? This is where I can't believe how fast the time goes, okay? But hopefully I wanted to kind of establish a set kind of plan, a calendar going forward. Now, first off, if you said, James, where can we see a playlist from this class? So as I'm following through, where can I see a listing of those? And I'll title those so you can see those. So this would be something I would, that link that I just sent to you in the chat, for sure bookmark this, okay? That way you can follow along. Now, the other place is if you went to, let's say, this page, you're going to notice that we have a webcast calendar. And what you're now going to notice on that webcast calendar on the right-hand side, you could say, hey, I'd like to actually follow Barbara, okay? Well, it's going to pull up any of Barbara's classes, and it's going to show what she taught, okay, or what she plans on when she is going to be teaching. If I went down to, say, Coach James Boyd, you're going to see that over the next couple of 2 weeks, etc., as we go forward in time here, those things that we talked about that we said we're going to do, they're going to be filling in. So that's another way to kind of see where can I see those classes that he mentioned on his sheet. Now, would today be a good class to go back and review? Of course, okay? This is not meant to be a one-off. This is not meant to be, attack the information. Now, I'm out of my time here today. Remember, with what we discussed, it was done for example purposes only. Camera May will be coming up next. This afternoon, we'll have Barbara Armstrong with us. Remember that all investing involves risk, and this has been the class on Investing Master Series, setting the expectation for 2026. Thanks so much. I'll be back on tomorrow. Take care. Bye-bye.